Alrighty, what's up, guys? Well, pretty wild last couple of days here. So, a bit of an update video for those of you good people in the mastery. And I'll probably end up putting this on YouTube as well, so hello to everyone on YouTube. But yeah, guys, pretty eventful last couple of days. Especially for us in the mastery, because we've got that 4100 call credit spread on the S&Ps. Which, we put that trade on somewhere back here. So we got ourselves a nice entry, but of course anytime you're short and a short squeeze unfolds, life can get a little bit interesting. So if we check out the last few days here through the lens of the hourly chart, here's what we're working with. We got the initial flush and the short-lived break of the daily 200 SMA. So everyone and their mama's mama getting short for the break of that daily 200. From that point on, guys, the bear trap was set, and you got your short squeeze Thursday. You got continuation into Friday, and then yesterday, Monday, you got a little bit more continuation, and then down goes Frazier. So that can always be, the short squeezes can be a little bit tough. They are spastic, they're aggressive, they're pretty relentless. It can certainly feel like it's never going to come to an end. So a lot of questions come up. Should we take off our call credit spread? Should we buy calls on everything under the sun? And don't get me wrong, guys. If you can buy a couple, this thing was freaking strong. So, dips to a 3-minute 21, dips to a 5-minute 21. You can day trade these kinds of moves, but as far as swing trading, what I think the right thing to do is to always wait for the back test. Right? Always wait for your first dip. And even if it feels like you're never going to get that dip, I can promise you're always going to get that dip. So the key, of course, is how do we handle that backtest? Looking for a dip towards a 21 EMA. At that level, do we stabilize, find some support, catch a bid? And from that level, if things can go bullish again, big 3 indicator prints a buy signal on a 15-minute, a 30-minute, we're probably off to the races. You got your flush, it handled it well, and the party should continue. Of course, looking at the chart in front of us, it didn't handle that back test all that well. So for food for thought, those of you in the mastery, those of you on YouTube, make that one of your golden rules. Right, throw on some Chandler channels anytime we're more than 2 to 3 average true range moves above that 21 EMA. Day trade it, take it to lunch, but go to bed alone. Right, you don't want to be buying up here and taking that trade to bed. Yeah, you caught a gap up, it might work, but eventually you're going to get caught up in that flush. Right? The better entry is waiting for that flush, see if it stabilizes, then you're planting your seed. But as I mentioned, not a very impressive performance here from the Bulls. So they got a few problems here, guys. Put it this way, for now I'm pretty glad we didn't end up getting short, especially not up here. But a few things worth noting here. So we pull up our daily chart. And like we talked about, down here at that daily 200, under that level, there's just not too much support left to save the market. So they fought the good fight where they had to fight the good fight. You get your short squeeze. Now it all kind of gets a little bit troublesome here today. Fails to hold the 21 EMA, fails to hold the 50, and the big 3 indicator once again prints a sell signal. All right, so they come out guns a-blazing, smashing the shorts, creaming the bears. They actually cancel out the sell signal. Right, it's all really impressive. If they could have held the back test, if they could have held the dip better, you probably would have gotten some decent continuation. But for now, they get a big fat F. They lose the 21, they lose the 50, and they got another daily sell signal. Now, one thing worth noting here, check out the MACD. Momentum continued to print negative here. So price is going higher. Yeah, momentum tried to go higher, but it never went positive. That would have been another indication. They hold it up here at the 21. Momentum finally goes bullish. That would have been an indication we're probably poised for a push higher. But none of that is the case for now. So your daily chart gets a little bit of a hole in the head here today. And on the heat map, the 1 hour chart, the 30-minute are bearish. right? The 3 minute, the 1 minute they're bearish. Nothing setting up under the surface that would suggest, here comes some massive rally. Now, one thing we do maybe want to take in consideration, assuming the signal still prints tomorrow at the open, is down here on the what I'm calling the thrust mode. So continuing to work on this new indicator, but the game plan on my end is for those of you with the big 3 signals, we're going to throw that in as well. So I'll keep you posted on all of that. But long story short, when you get these magenta arrows down here, so in this case you're getting the magenta arrow pointing up, what that means is we're trading more than 1.5 ATR from the 21 EMA, and momentum is bullish. So we're oversold, and momentum is finally starting to turn the corner. So what that can lead to is a reversion to the mean. One good example would be on your 30-minute chart. Check this out. So you get that big short squeeze. They're pumping, they're pumping, they're pumping. Then you get that magenta arrow on the 30-minute chart. Right? That tells you we're overbought, and we're still trading a little bit too far above that moving average. Right? That all sets it up for the reversion to the mean. So if the bulls have any I can't even call it ammunition. If they've got anything that might help them try to pop it tomorrow, maybe it's that signal on the 15-minute chart. But I think they got bigger problems. Now, speaking of bigger problems, the pieces of our twisted puzzle. Check out the dollar today, guys. This thing's on crack today. Like, just really, really strong. Very, very strong. So the plan that we talked about on our Sunday session was best case scenario for the bulls. The Dixie takes out 104 this week. Right? Go under the 21 EMA, cancel out the buy signal, take a little bit of a chill pill. It's great for the market. Wakes up today and decides to do the complete opposite. So this all is this just does not point towards we're in a market where you want to buy the dip and buy the S&Ps, buy the QQQs. This points towards going to be easier for the S&Ps and the Qs and all that good stuff to trade lower than it would be for them to trade higher. Now here's where it gets really interesting. One of the best things the bulls had going in their favor over the last couple of months here was this potential weekly downtrend that started to unfold in the dollar. Our indicator went from bullish to neutral, some signs of exhaustion, eventually goes on to break the 21, breaks the 50, and then the indicator finally goes bearish. That tells you the trend, the structure, the momentum is starting to be aligned here for a potential downtrend. So you get your initial flush, then you get the back test. What I would have wanted to have seen here, to have conviction that we're in a market where you want to be long all the time, would be for the Dixie to rally up to that falling weekly 21 and then just get creamed. Right? Big rejection, go take out the previous lows. That, my friends, would have been great for the market. She's got other things in mind for now. We're back above the 21 EMA. We're poking our head ever so slightly above the 50, and they've canceled out the weekly sell signal. Right? The bears no longer have control of your weekly chart. Then you throw into the equation, the bulls have got full control of the daily. They've got full control of the 4-hour. They've got full control of the hourly. The bulls have got it going on here on the dollar, and as long as that's the case, this looks pretty poised here for a push back up towards that daily 200 SMA. So in the event that Dixie's got another dollar or so of upside, no bueno for the market. So as always, we'll keep an eye on that. And then the junk bonds, the old junkies, again, like we talked about on Sunday, best case scenario for the bulls is that you see HYG this week back above all 3 of your moving averages. 21 EMA, 200 SMA, and the 50 SMA. Not quite the case. You did pop a little bit yesterday, but man, does this thing get stuffed right back down today. So for now, it doesn't look too likely that you're going to get the junk bonds trading back above your moving averages. That would be good for the bulls. Trading under them, not good for the bulls. So as a recap, guys, HYG at the moment, not supportive of the market going higher. The dollar The old dirtbag Dixie. That's what they called her in high school. Not supportive of the equities market going higher. The structure of the S&Ps themselves, mama market. Well, under a 21, under a 50 with a sell signal. Not quite supportive of let's buy calls and hit the beach. It could turn into that. Right? That could be the picture we're looking at tomorrow, maybe Thursday, maybe Friday. But for now, we've got to work what we got right in front of us. So our key level here, guys, next few days, 4,000. We talked about that on Sunday as well. If they fail to hold 4,000, it all gets a little bit sketchier. So under 4K, I would imagine we're going to come back down once again, test that daily 200, and I don't think we hold this time. You lose your 200, I think you lose your head if you're long, and I think we got a pretty big, what's the term? Air pocket is Johan Carter would call it. Pretty big air pocket to fill here down towards 3,800. So that is about it, guys. Right, moral of the story, couple of morals of our story today. Always wait for a back test. Right, don't break your rules, don't fall victim to the FOMO, don't buy a freaking hourly chart at +5 ATR. Buy it on a dip, but you don't blindly buy that dip. How does it handle that dip? Do we find support where we should? Do we stabilize? Does my 1 minute, 3 minute, 5 minute, 15 minute charts go bullish? Right, none of that happened on this back test. So following your rules, or following those rules, you would have never have gotten long for a swing trade up here. You would have never have gotten caught in this flush, and you would have never have gotten long at that 21. So you also would have avoided the other flush. So for tomorrow, guys, it's all about 4K. If they can rip the old girl back above it, maybe they try to do a little bit of renovation to the damage here. Under 4K, then I think the strength in the dollar, the sloppiness in HYG, and all the sell signals here probably got us heading back down. So what I would look for tomorrow as far as the next trade would be the short the bounce. Not seeing anything I want to buy the dip in just yet. And last note here, guys, we are in a market where most of your focus should be on the S&Ps themselves. Right? As goes the market, goes the stocks. So it's no coincidence at all that right around the same time the S&Ps kind of crapped it up today, AMD gave up the goods. All right, at one point AMD's up like 5%. Finishes a day only up 1%. Let's see what else out there. Apple. All right, Apple pulling all the way back. So I know a lot of you know this, but always good to keep in mind. As goes the market, goes the stocks. So you come into a day like today, the dollar is screaming, HYG is sloppy, the S&Ps are sloppy. Probably not the day to go buy Microsoft, Google, and whatever it might be. You don't have the alignment from the market itself. So a few things there, guys, but that is that for now. Right? Patience always pays, and it kept us out of trouble this time around. So for now, we'll keep on holding on to our 4,100 call credit spread. We'll be in good shape here to take close to max profit if we can take out these lows around 39.40. But as always, we'll be ready to make adjustments. And for now, I'm thinking the next trade is another call credit spread here on a bounce. So as always, my friends, thank you for being a part of the group. For those of you on YouTube, thank you for being a subscriber. And I'll talk to you all soon. Adios.